Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. This video is being filmed on Thursday night for Friday's trading, October 23rd, 2009. Traders, with the most bearish analysis I could find in the S&P in the last few weeks, being this week, it still bowled its way up. It just does not want to go down. We tried everything in our power to jump on the bear wagon for a couple of days, but you know what? Forget it, traders. That S&P is just too strong. We went short yesterday. The market dropped 8 points. We took off 50% of our positions and ended up stopped out on the upside on the other half. So traders, you know, I've watched this thing all week start to try to go down, turn around, and come right back up. It is a strong market. But being that my trading this week in the S&P isn't worth two goats and a chicken, I thought I would look at another money tree tomorrow, and I found something really interesting, and that is in the sugar market. In the sugar, we've had two failures of the head and shoulders. We've had two tests of the head of a major head and shoulders in sugar. Both have failed, and I think the sugar is set now to go down pretty hard. So we have a couple of charts we'd like to show you on that sugar trade, and we're likely going to take a neutral approach in the S&P, at least at the onset of this trading session, and then most likely find a good buy area and jump in the S&P for Friday, because that's been the ticket all week. Even if you want to sell this thing, you buy those dips and it goes right back up. So I am not even going to consider getting short the S&P tomorrow. I'm going to look for a buy spot. We'll see how that goes. Absolutely. If you're at my site, www. I didn't even get my site right. Talking about a bad week. I don't even know where I'm from. If you come on down to my site, www.livewithoscar.com, jump into the chat rooms. I will certainly be there to let you know when we get the signal to head into the S&P. But we certainly have a very, very nice technical setup in the sugar. And with no further ado, let me show you some charts. Okay, traders, what we are looking at is a daily bar chart of the March sugar. This is March 10 next year. It's the most actively traded sugar contract in the futures right now. And this is a daily bar. What you are looking at is a head and shoulders formation. Then this blue grid here represents the head, or basically the middle of the head. What we expect when we see a head and shoulders is this. You get a test of the head. If it fails, you get a breakdown, and it usually continues. This was a test of the head, a breakdown, and a second test of the head, and then it failed. That's two failures at the head of this head and shoulders, and basically that's telling us that this market's back is broken, and it does want to come down. Now, at the same time, some of you might call this entire thing a bullish flag, and even if it is, we've hit the bottom, top, and likely on its way back to the bottom. So we have a short trade in sugar no matter how you look at this, because the technical setup, or I should say the formation, is absolutely bearish, and the technical indicators are bearish. So again, head and shoulders formation. The blue grid represents the middle of the head. The failure of the head, which means it's not a continuation pattern, and it is a valid head and shoulders. The second run up, the second failure of the head, when it first failed, it was up here. The second failure was down here. That is a market that is beginning to break down, and I think we have some good downside coming. So we will certainly be looking for a short trade in the sugar on Friday's trading, October 23rd, 2009. So you can see a very bearish formation, no doubt, in the sugar. Let's go look now at the indicators and see if they confirm the downward direction. Okay, traders, we are now looking at some indicators that we like to use on the sugar market. The first one here is the CCI, or Commodity Channel Index. Blue pointing down, certainly a bearish look right there. That's one bearish indicator. Right below it is the RSI, once again pointing down, bearish look, second bearish indicator. Below that we have slow stochastics, rallied up, hooked, and it looks like now wants to head down. %K and %D have crossed, another bearish indicator. Below that we have the DMI, or directional movement indicator. When the green is pointing down and the red is pointing up, like you see in this picture, once again bearish. I looked at about 14 indicators, of which 13 were bearish. And so is the formation. So that to me looks like a technical giveaway, a technician's dream, certainly a market that should drop on Friday. Of course, like every day, our stops are in just in case this market decides to go up. We never trade without stops. But if you have a bearish formation with bearish confirming indicators, you must go in the direction of your formation and the indicators. And in this case, for sugar, that is a down move expected on Friday. Do your homework for sugar traders, pull your indicators, look at the chart, compare notes, and I'll see you all at the site. So, traders, you see the charts? Look at that head and shoulders in the sugar. 2 failed tests of the head. Breakdown looks like it's coming our way. You see what the indicators look like. Once again, traders, let me show this to you on the board right behind me. This is basically what we have, a crude drawing, but basically what we have in sugar right now. Head and shoulders formation. After the head and shoulders, you expect some sort of a head test. So the market does the head and shoulders, comes down, rallies up, gets to about the middle of the head test area, and fails. Begins to break down, comes back up again, tries to test the head area, fails at a lower level this time and breaks down further. Traders, that is a market showing you that the head and shoulders was a valid topping pattern, and the likelihood is you have more downside coming. Now, of course, you could end up going down for a while, turning around and going back up, but for now, we're day traders, right? We will absolutely take that and go with it on the downside because the indicators are screaming sell, and that formation is a pretty good formation. Traders, this is a very good lesson on how to handle head and shoulders formations, so please pay attention to this video. If you have to, rewind it again, look at the chart segment, and then look what I have on the board here, because it's a very, very good lesson, I kid you not. I have used this many, many times in many markets, and more often than not, it is a winning combination. So take a look at the sugar for yourselves. Remember to always, always place your stops, because a stop is your best friend, and without stops, you'd be wiped out in one day. Keep your stops in at all times, and I said this in every video all week long. Do not move your stops because they're being threatened, traders. I have traders, I've looked in their accounts, I know that that's what they're doing. They get emotional when the market starts to go towards their stop loss because they don't want to accept the loss, but that's not what this game is about, traders. Losses are an integral part of trading. You simply cannot go 6 weeks with winners and then have a couple of losers and not want to accept them. That is part of this game. It is part of what you have chosen and what we all have chosen to do for a living. This is our job. Losses and profits, right? You can't just go profit, profit, profit. It's not the way this game works. Now, if you're in a trade and because it's not profitable, it's getting close to your stop, if you cancel the stop praying for profit, basically you've thrown that trade out the window, and even if it comes back in your favor, you don't even deserve to win on it. So please do not cancel your stops. It is so important that you do not do that. All right, traders, let's see what happens with the S&P. I have a feeling it's going to pull back a little bit and go straight up tomorrow. You could see as high as 1114 if they really push this thing. But again, we're going to take a neutral stance and let this thing test the Emini sweet spot. If it holds, I'm jumping in. We'll talk about that at the site. All right, traders, it is Friday. It's going to be an interesting day. Be careful out there. Keep your emotions out of trading. And one of the best things you can do to keep your emotions out of trading is to say this to yourselves every morning, every afternoon, every evening. And you know what that is? Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.